Joining me right now is Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and the King's College in Manhattan, Professor of Business and Economics, Fox Business contributor, Professor Brian Brenberg. Great to see everybody this morning. Thank you so much for being here. Ken, kicking it off with you. With all the volatility, it's been a pretty good first half of the year, certainly for equity investors. What's your expectation for the second half?
Yeah, it's so funny because coming into this year, we had so many doomsayers saying, "Oh my gosh, the market's going to go down." Here we are, double-digit returns, and you have to kind of see what happened here. I mean, policy is really going to sit back a little bit. Rates going to stay low. We have FOMO happening lately. FOMO, fear of missing out. At least fear of missing out is a good market. So I think we're going to continue. Again, we have to keep our eyes on it and so forth. But I think too many people over-anticipated. Start looking at fundamentals and coming up with these kind of gyrations and so forth. And at the end of the day, the market is doing well, and underneath it, again, where else are you going to put your money, Maria? So here we are, starting off with another second half of the year. I think it continues the same, and the reason why, I said, where else can you put your money? We have some FOMO now, we have some momentum behind it, and we had a lot of back and forth rotation first half of the year. But at the end of the day, money usually goes towards innovation, and that's what we've been seeing the last few weeks, and that actually makes the markets even more feisty.
Yeah, FOMO, meaning fear of missing out, is certainly one idea that keeps investors in equities. But let me ask you about sectors and where you want to be exposed, because we're having this debate, growth versus value, as we know that the Federal Reserve is going to start interest rate hikes probably next year. Is that a headwind coming on to growth? What about the potential tax increases from the Biden administration? Another headwind moving into growth. Do you differentiate in terms of sectors how you allocate capital second half?
So we really like QQQ here, the NASDAQ 100. Look, a couple of months ago, we had leaders in beverage companies, soup companies, detergent companies. That doesn't really last too long. Those value companies only have 1 or 2% top line growth. Money really wants to go where there's a lot more growth, a lot more action. So I still think the pendulum, though, it's going back and forth a lot, added growth into value the early part of the year. Now we're starting to see growth doing well. NASDAQ setting a record yesterday. So I do think that we'll continue this way, Maria, to start seeing more money into technology, more into that for the second half of the year. And that's where we are. We're happy to be here now. But again, for a while there, money really went driven hard towards value. As far as the headwinds with taxes, yeah, that's a big bugaboo out there. And again, I don't think they're going to get the major tax overhaul they want, especially in front of midterm elections. It's not very popular to raise taxes right before midterm elections. But again, we're going to always hear about these different things. So a lot of these infrastructure deals, different things are out there. We still don't know how they're going to be paid for. So investors will have to watch that very closely. And also, Maria, on top of that, will it be retroactive and how that will be dealt with the market?
Yeah, well, that's for sure. Well, let me ask you about all the conversation we've been having about communist China and whether or not investors should be investing in Chinese companies, particularly any company potentially tied to the Chinese military. The hot deal of the day this morning is Chinese ride-hailing company Didi. It raised reported $4 billion in its IPO last night. The company priced the deal at $14 a share. That was at the high end. The China-based company will start trading on the New York Stock Exchange today. Ken, would you buy this stock?
Well, thanks to the Grinch, we wouldn't touch it with a 39.5-foot pole. How do you like that? So why? Accounting irregularities. It's a kind of Russian roulette, which companies will be listed, which ones won't be listed. So many headwinds. And by the way, that whole driver thing, look, here in the U.S., we have Lyft and Uber. They're still not profitable. And it's a fine line between the drivers. Are they employed? Or are they independent? Again, we don't like this space to begin with here in the U.S. Particularly, we're not going to like this at all, especially with China companies, and God knows where this goes and which companies be listed, delisted. We don't need that added risk. We're here. We have so many great opportunities here.
It's a great point, and certainly the conversation is still going on whether or not to invest in Chinese companies. We'll see where policy lands. Real quick on the economic news of the day, the ADP number coming out in 2 hours' time, 8:15 a.m. We're expecting 600,000 private sector jobs created this month. And, of course, we're waiting for the June jobs report. That's the big report coming out on Friday, which typically mimics this report. Is 675,000 priced in, an employment rate at 5.7%? What will the jobs numbers this morning tell us, Ken, real quick?
Yeah, so basically it's more about the direction, the actual number. The direction is positive. We're creating new jobs. And good, look, we have under and over about 200,000 jobs. There's so much noise, so much seasonality. It's hard to know for sure. But it's really the direction that we kind of help looking at, and the direction is very positive.
All right, we will leave it there. Ken, it's good to see you this morning. Thank you so much.
Great.
Stay cool in 100-degree weather we here in New York today. Thank you so much. Ken Mahoney joining us. We are just getting started. Coming up